Hello everyone, today is Tuesday, February 11th, and it's about 9:43 p.m. Eastern Time. I wanted to make a quick video about a couple of trading observations. This is trading education, purely trading education, just things learned from 20 years of trading and 20 years of chart time. A lot of chart time, and reading a lot of books. Haven't been at this a long time, and been blue wave trading for nearly 17 years. I have, people that respect me, and I have people that don't like me. It's just the way it is in this business. We would, I'm just going to say it, Mike from Big Mike's Trading used to be a client of ours. He owned the indicators, but this was like 10 or 11 years ago, and I was on the active in the forum at one time, and we're not in there anymore, and we don't really have a great reputation in there because traders' expectations were they wanted to buy the auto trader, plot it on a chart, and never put much into it, and just hope that the automated trading strategy would think for itself and make all the trades. But clearly we've kind of come full circle to the fact that you really need to do a little more than just plot it on the chart and walk away and come back and hope you'll be a successful trader. So if anybody's friendly in the Big Mike's forum, we would like to be friends with them again. We feel we have a lot to contribute to the community, and we'd like somebody to speak up for us there if possible. In any case, back to the purpose of this video. Just wanted to share a couple things about trading in today's chart and finding levels, and also how to predict levels when the market is really extended, really strong. Because Jim mentioned in his video, he just wasn't really sure how to predict the levels of, above the market, and I'm going to show you, how I learned. So the market's divided into three parts typically, and I drew vertical lines here. This is the open, and typically around 11:30, by 11:30 the high or low of the day is put in. And so you can see here that this is the high of the day, and then so the first part of the market, there's three parts to the market in a trading day. So this is the morning, and this is the midday, if you will, or lunchtime, which lasts from like 11:30 to say 1:30 approximately, and then into the close. And basically, in the first part of the session, traders want to get into their positions. There's usually good volatility in this part of the day. At this point of the day, a lot of traders go to lunch, and there's a break, but it doesn't mean the market won't move during this part. And then towards the end of the day, traders resolve their positions as they prepare for the next day's trading. And so based on what happened in the first 2/3 of the day, so there is pretty good trading opportunities in the afternoon, and it's kind of a specialty unto itself, trading this part of the day, but one I've come to know pretty well because living in Hawaii, I can't trade the open. So typically when I get up in the morning, by the time I'm ready to trade, it's between 1 and 2 o'clock. And typically there's a pretty good move beginning around 2 o'clock. And this was 2 o'clock right here. A lot of times it begins a little bit earlier, but very often it's right on the nose, right around 10 minutes to 2 or 10 minutes after 2 p.m. Eastern Time. So you can see quite a nice move here. And then of course I was a little late getting into this trade. I had wanted to get in earlier, but just wasn't prepared. But I managed to make it and correctly forecast the trade. So first lesson about the three parts of the day here. Second is how to read and choose levels that are key levels. Now this is Jim's levels as he drew them on the chart. And I want to show you, I encourage you to do your own thinking on choosing these levels, and you can follow these techniques because there's a number of ways to do this, and some of it's pretty obvious. The way I would draw these levels is where price has the most hits, that is the level of resistance. So take this area. We have a hit at price here, 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 and here. We got 4 hits in this area. So I would draw the trend line where the market hits it the most, and that would be my level. Jim's level was a little bit above 94.50 somewhere, and I would draw it at the exact price comes in a little above 94.60. Okay, so same here, where support becomes resistance. So the most hits in this area are really, this level's drawn pretty well right about in this area. Whenever you have these tails, these are overshoots, and I'm going to show you another method here. This level here, as drawn by Jim, I would draw it like this, the most hits. And I also want to point out that round numbers are often the key level. This happens to be 92.50, and this is 91.50 right here, and it coincides once again these hits on the chart here, the number of hits, this 91.50 here. So you got hits here, here, here. This actually went to the next level. This was resistance, and then it was support here, but then broke through, and then it was resistance, and then broke through again. So indeed this was a key level here, but this was 91.50. Okay, and then of course, even if I just drew levels at the round numbers, even numbers like 100, like 9,000 for example, or 9,050, these were pretty key areas here. So another way to do this is to see this more clearly, is to make this a line on close chart, and then clearly you can see the hits. This doesn't have the tails and the overshoot, but it makes it real easy to draw your trend lines. Okay, this level that Jim was talking about, he said it's not really an area, but I would submit to you that this is an important level here, an area of interest, he said. I would definitely agree with that, because you can see all the hits here. As we look at the line on close chart, clearly this is a good level, and then you can see here this kind of zone, and then going back further, this is kind of 9,000 even, and you can see resistance, support, resistance to the next level, and so on. And going back on the chart, again, the 9,000 area. So a line on close chart can be very effective in drawing your key levels. So now, if you're wondering where is the market going in such a strong market, this is how I was taught to do it. So I actually drew this back in January. These are Fibonacci extensions, and I've had this chart on my screen, and I drew this all the way back in January. So note that I drew a Fibonacci extension from this kind of big picture move. So this point, from this swing to this swing to this low, and then here is your Fibonacci's. Notice how price really respected these levels. So this is our 38% extension from the move here. This is the 50%. And this is the 61, which it blew through. The 71, and then the 100. Okay? But what's most important on this big picture analysis is that this is the 138% and the 150%, and then the 200%. So these levels, and of course I didn't draw in the 176, but that would also be a level, but these levels above the market would be areas in Fibonacci analysis that the market will respect as it approaches these levels. As the coming days come, what I think is happening in the big picture here is this is February. I think this market is gunning for 10,000, okay, way up here. I think it's reasonable to say that this is going to resolve with the NASDAQ, basically techs leading the charge and shooting for 10,000. That's what I think is happening here. Okay, then I drew another Fibonacci extension. So let me get this one out of the way. And I drew a little one here. And that was in a smaller context, but what this is showing here is here's the 200%, and notice when I did this swing, which was a low here, a high here, and then here, and then this 200%, look at how this was resistance here. So this Fibonacci extension, low, high, and then swing low, and then here's your 200% extension, which was this long multiple day consolidation and resistance at the 94.70 area. That's I think Jim mentioned this area as well. This was a big area of resistance. Well, look at how the Fibonacci numbers played out on this one. Okay, so let me move this guy out of the way. Then what I did is I drew a high and a low from here to this resistance area with the Fibonacci extensions above. And so these are all areas that the market will go. Now if I put these back, these areas where the Fibonacci's have confluence, that's another reason for this here, because this move here, well, there was confluence, this was the high, but let's put back this other one here. This was actually this is where I drew this bigger picture extension based on this larger swing here. And so where these different Fibonacci grids have confluence, these are strong areas. Okay, here there's confluence here, there's confluence here, there is confluence here, there is confluence here, and then looking above, we have confluence in the 9700 area, and then again in the 9800 area, 9830 and above, and then of course on the upside the 200% extension takes us to 9950, which is within striking distance of 10,000. So basically this 200% extension is the distance from here to here, and then the distance from here to up here, and I'll demonstrate that. Okay, so this distance from here to here would be the same as the distance from, actually it's here to here, and then another 100%, the 200% would be from here to this 200%. I needed to bring this down a little bit, so yeah, this 100%, this is the 200% extension. So that's how you're, you look for symmetry in the market. I hope this isn't too complicated for you all, but that's how you find levels in the market, above the market, in a rising strong market or a falling weak market. Hope this helps.